This is Andrew, and right now, he's staring at his computer screen, sweating bullets. You see, Andrew is just an ordinary retail monkey who likes to dabble in the stock market for fun. But today, the screen in front of him is flashing a ticker symbol that's shattering his entire worldview. SNDK, otherwise known as SanDisk. Yes, the exact same memory card company you used to store pirated movies and old photos. Its stock price just smashed right through the $2,200 mark. Andrew rubs his eyes and pulls up the one-year chart. Just 52 weeks ago, this company's stock was sitting at a measly $40 or so. This isn't just a doubling, this is a near 100x wealth-generating nuclear explosion. Andrew's group chats are going crazy, posting their gains, screaming about financial freedom and the AI supercycle. Andrew's heart is racing, his finger hovering over the buy button. He desperately wants to join the party, but a primal fear grabs hold of him. Going from $40 to $2,200. Is this really a game an ordinary monkey like him should be playing? If he rushes in now, is he just going to end up catching the final falling knife tossed down by the Wall Street bigwigs? To solve Andrew's dilemma, we need to figure out exactly how a once mediocre thumb drive company managed to skyrocket its valuation nearly 100-fold in a single year. And more importantly, what's hiding behind this massive frenzy? Is it a fundamental miracle or a cruel game played by capital? On the absolute surface level, this story is incredibly sexy, and it goes by the name. The endgame of AI is storage. For the past few years, every monkey knew AI was hot, and everyone was frantically hoarding NVIDIA GPUs to train large AI models. But by 2026, the rules of the game changed. AI shifted from cloud training to edge AI, local inference. This means your phone, your PC, and maybe even your smart microwave need to run AI directly on the device. And to run AI locally, you need a massively huge and incredibly fast storage space to cram all those models into. Right on cue, Wall Street's gaze landed on SanDisk. Suddenly, everyone realized that SanDisk wasn't some sunset industry selling USB sticks anymore. It was the absolute necessity selling the shovels, heck, selling the buckets in the AI gold rush. The data doesn't lie. Just last quarter, SanDisk delivered an absolutely explosive earnings report. Revenue grew 250% year over year. Enterprise SSD revenue literally tripled, and gross margins reached a staggering 78.4%. So, what Andrew sees is a perfect story. AI needs storage, SanDisk sells storage, SanDisk makes a killing, so naturally, the stock goes up. A flawless logical loop, right? But wait, can simply having good earnings really cause a massive physical company to skyrocket dozens of times over in a single year? As Andrew digs a little deeper, he starts to glimpse the actual gears turning the capital markets. Because SanDisk's 100x surge isn't just about fundamentals, it's driven by two textbook examples of a violent Wall Street squeeze. The first one is called the mandatory index onboarding. Back in April of this year, a decisive event occurred that altered SanDisk's destiny forever. It was officially added to the NASDAQ 100, kicking out the previous constituent Atlassian. Now, this isn't just some honorary title. Remember how Monkey explained index funds earlier? Behind the NASDAQ 100 are passive ETF funds, like the QQQ, tied to hundreds of billions of bananas globally. The very moment SanDisk was added to this all-star roster, every single passive fund manager in the market, regardless of whether they understood the NAN flash cycle, and regardless of whether they thought a $2,200 SanDisk was too expensive, was required to buy SanDisk stock. It's exactly like the university cafeteria introducing a mandatory set menu. Millions of pension accounts and clueless retail investors unknowingly and automatically bought SanDisk at all-time highs. This massive brainless wave of passive funding launched SanDisk's stock price straight into the stratosphere. But it doesn't end there. What truly made the stock go on a tear in June, breaking past the $2,200 mark, was the second game, the gamma squeeze. As the stock price surged, countless gambling monkeys dealing with serious FOMO, just like Andrew, started frantically buying call options at $2,200 and beyond. You see, when retail investors buy call options, the market makers, basically the guys running the casino, are forced to buy the actual underlying SanDisk shares on the open market to hedge their own risk. Retail monkeys buy options like crazy. Market makers are forced to buy more shares. The stock price climbs even higher. Retail makes money and buys even more options. Market makers are forced to buy even more shares. It's a perfect upward spiraling perpetual motion machine. At this stage, SanDisk's stock price had completely escaped Earth's gravity and turned into a pure financial derivative carnival. Understanding all this, Andrew's hand hovering over the buy button begins to shake because he finally sees the extreme fragility behind this 100x myth. SanDisk, at its core, is a pure play NAND flash memory supplier, and the storage industry is notoriously known in the tech world for its heavy cyclicality. When there's a shortage, everyone scrambles for it, but the moment production capacity catches up, prices plummet like an avalanche. Right now, SanDisk doesn't have the diversified risk moats of high-end products like HBM or DRAM. Its massive valuation is basically balancing on the head of a pin. The market expects perfect profit growth for years to come. But what happens if the cycle suddenly turns? And what sends a real shiver down Andrew's spine is that while While retail investors are cheering for a $2,200 stock price, the fine print tells a completely different story. Western Digital, the company that used to control SanDisk, is quietly dumping millions of shares right at the top. The insiders are exchanging their chips for cold, hard bananas. And who exactly is going to be left holding the bag? That is exactly why Andrew helplessly watches SanDisk climb to $2,200, but absolutely refuses to pull the trigger. If he rushes in now, what he's buying might no longer be a world-changing AI storage giant, but rather an incredibly expensive VIP ticket to become the bag holder for an imminent cyclical crash. In this high-stakes game of musical chairs, the music could stop at any second, and the apex predators of Wall Street are just smiling, waiting for the next Andrew to walk through the door. Fade to black, fast-paced disclaimer speed. For legal reasons, this video is nothing more than the ramblings of a paranoid, schizophrenic monkey in a make-believe jungle talking about memory chips and bananas. Please do not sue Monkey. And a huge thank you to the generous members of the Banana Republic for bankrolling and funding these videos. You are all truly wonderful. Stay safe, and we'll see you in our next video.